And let's now try and understand the fine print of IRB Infrastructure's earnings. Anil Yadav, the director at IRB Infrastructure Developers, joins in on the show right now. Anil, hi, morning. Good to have you today on the show. Just going through your quarterly performance, your revenues have gone up about 30%, but there is a spike in road work and site expenses by about 40 odd percent. Is such high cost likely to continue going ahead? And then, what would be the impact on your margins?
Thank you. Good morning. We operate in two segments, and if you look at in the construction segment, typically the EBITDA is around 22 to 24%, and in the BOT segment, the EBITDA is 85 to 88%. So if you compare with the trailing quarter, the EBITDA margin has improved from 41 to 42%. Overall, both the portfolio put together. But if you compare with the corresponding quarter of the last year, that is not comparable because that time the construction revenue were lower as compared to the BOT revenue. So now the BOT revenue and construction revenue mix has changed. That has impact on the EBITDA margin. But if you compare with the trailing quarter or segment wise, I think EBITDA margin is more or less the same as compared to the corresponding quarter of the last year as well.
What is the outlook then on raw material prices as well? Because we've seen them ease by in the quarter gone by, but can we expect them to remain low in the quarters ahead too?
So I think, in fact, we provide a trend for the raw material, and there are three key raw material which is used for the road construction. That is the cement, bitumen, and steel. And if you track the last 12 or 15 months, I think the prices more or less remain stable. We have not seen any major increase in the prices. And going forward also, we believe that EBITDA margin should remain at this level also for the construction segment.
You are sitting on a lot of land bank. I used to ask this question to the IRB management every quarter. A lot of land bank. How are you looking at monetizing it? There were plans to construct, housing colonies there. What is happening to that land bank? Still there? When are you monetizing it?
Before moving to the land bank, I would also like to touch upon the profitability of the company. If you compare with the PAT, improvement in the PAT is almost 56% as compared to the corresponding quarter of the last year. The share of JV post PAT post JV, the share of JV has increased because of the fair valuation loss in the JV, and which is non-cash expenditure. If you look at the PAT post JV, that is improved by 12%. Now coming to the land bank, we have around 1,000 acres of land bank. And at appropriate time, we would like to, we will monetize that land bank. As of now, nothing on the card to develop as such. And as stated in the past also, we are not going to commit any additional capital on the land bank. And just to add, that still remains a non-core for us. And overall investment in the land bank will not be even 1% of the total investment in the road sector.
My point is something else. I'm saying that is there a monetizable potential in FY25 which could just add substantially to your profitability? I mean, could there be monetization happening very soon? Because 1,000 crore land bank in today's market price, which is a clean land bank, eventually monetized over 2-3 years, could change things.
I think we do not like to put any timeline on the same. And at appropriate time when we have a firm plan or firm commitment, basically if we find suitable buyer for the same, at that time we can discuss that.
Have gone up in the first half with the new NH44 project win and the upfront concession fee of about 4,000 odd crores. Where do you see your borrowing and finance costs going?
So I think this project will be developed in a private InvIT, and private InvIT does not get consolidated with IRB. So for IRB, the cost will not increase, and further this project will add toll revenue from year one. And roughly 65% will be debt and 35% will be equity. and 35% translates roughly 1800 crores. Out of that, 51 will be brought in by IRB and 49% by Government of Singapore, who is the financial partner in the private InvIT.
And given that the board of private InvIT as well had approved that maiden distribution of about 155 crores, that will be reflected in Q3. What is the outlook in terms of your cash distributions? Are there any more coming in?
Yes, the private InvIT, as more and more assets are getting matured, and we have done basically a debt optimization for three of the project in the last year. We are about to do roughly 5 projects in this financial year. So there, the amortization is getting deferred. So we are planning to refinance roughly 64,000 crores worth of debt for 5 of the SPV. There will be a shift in the amortization because concession period is pretty long, and that will save almost 15% cost, 15% amortization saving. So that will be a close to 1,000 crores of saving. So these things will lead additional distribution coming from the private InvIT, and going forward, this will be a regular phenomena for private InvIT to distribute on a regular basis.
FY24, how do you see your construction business moving, given that there is going to be volatility in and around central elections?
So I think before moving to the order book, in fact, we have just bagged a TOT project. We emerged on 27th as a preferred bidder. On 28th, we have received a LOA from the NHAI. We are grateful to the NHAI. They have issued the LOA in the record time. This swift action will ensure definitely help the government monetization plan. Now coming to the order book of IRB. Roughly, we have a 36,000 crores order book with this TOT. And out of that, roughly 11 to 12,000 crores is the executable order book over the period of next 2.5 to 3 years. And if I will compare this with the FY23 revenue, that translates 3x of the FY23 construction revenue. So I think we have a good visibility in terms of the existing order book. And further, government has planning to increase the award of BOT. They are planning to award additional 3,000 kilometers, that total capital outlay of 1.47 trillion. And out of that, they have prioritized roughly 87,000 crores worth of project. Out of that, roughly 40,000 crores is on BOT. So now BOT pie is going to increase, which will be almost 40% of the total award. Along with our financial partner, we will participate in the BOT, TOT, and HAM in the same order of the preference.
Thanks so much for taking time out and joining in and giving us a sense as to how business is shaping up. Tell you what, we'll slip into a very quick break.